Hey guys, if you want to improve your trading, then I think the quickest way is bar by bar deliberate practice. So that is exactly what I'm going to be showing you during this bar by bar session. So as soon as you've got the basics down, you know which kind of setups you're targeting, you then want to be focusing your bar by bar sessions around improving the four main areas, which is going to be trade identification, initial controlling of risk, mitigation of risk, and then optimizing profit. So as we go through here, you'll see how I go about doing all those four areas. So going through bar by bar simply on TradingView, we're way back here with HBAN in 1984. So you see how this stock is starting to tighten up here? What chart pattern do you see? See how you can see a potential cup and handle type pattern forming in here, starting to tighten up a little bit. So what I could be doing here is targeting something maybe through these highs. Let's take a reading on the risk. So we've got a couple of supply shoots in there, potentially interesting. Maybe see if it can tighten up a little bit more. Okay, another supply shoot coming through. So then we could be looking for a potential stop loss underneath those recent lows, maybe underneath the 21 EMA, which would be around about 3.25%. So this is then how we're planning out the trades. So like this, I'm targeting with a buy stop limit order through 233, stop loss placement just underneath $2.27. That's going to be around about 3.25% risk. If I then get filled, we'll talk about the active risk mitigation side of things as well. So not filled on this day yet, but a little bit of an ease of movement there. Low volume, opens on the low, closed on the high. So still happy to be targeting that through there. So this day here, we get filled. So this is then going to be the entry price. Now I've already got filled. I've got my stop loss in at around about 3.25%. So then I'm looking to actively mitigate the risk on this trade. So what I am then doing is looking for probably 2R of around about 3%, and I'll probably push that stop loss up a little bit higher underneath the 21 EMA. So what I'm then doing here is I'm looking for a 6% move. So go here, let's just plan out roughly where 6% going to be underneath, but kind of round number ish of $2.50 as well. So we want to be just below that. So around about $2.48. That there is where I'm looking to sell 1/3 of the position. So let's play it forward. That day there. So we've now taken off 1/3. So I've now free rolled the trade. So remember your deliberate bar by bar practice sessions, you want to focus really on the four areas. You want to focus on identify, control, mitigate, and then optimize. So I've sold 1/3 in there. I'm going to push this initial stop loss up now underneath the 21 EMA and underneath these final kind of lows in there. Now my objective is to try and sit through the first testing action. So I want to sit through the first testing action, then try and play the stock for a bigger move. So I'm expecting some form of testing action to be happening. That's kind of a high test and a reversal. So now the stock is getting out well. I think I've seen a reversal bar there. I'm going to push my stop loss up to break even on the remaining 2/3 of the position. So I'll put it just under, so it's then easier to grab it. So it's still going well. Now for optimizing profits, I'm trying to ride the 1021 EMA with 1/3 and 1/3. But if I think I get extended from the 10 EMA, then that is then where I'm potentially looking to take some off, choke some off by going low the day. So bearish candlestick there, holding the 10 EMA. I'll give it one more day. Okay, closes right on it. So when you get a bearish day, doesn't necessarily mean you have to exit, assuming none of your sell rules are violated. That there's kind of closing right on it. So what I'm going to now do is just stagger these stop losses. I'm going to put one here, then I'm just going to tighten up one a little bit because it's closing underneath it, but it's a demand tail, so it's right on it. I'm going to give it one more day. Still just there. That day there is kind of testing me a little bit too much. So what I'm going to do is just sell 1/3 in there because it's now had kind of two closes below, albeit low volumes. But if this tightens up again, I can always look to add back. So I'm going to get rid of that upper stop loss like this. So yeah, 245 for the remaining 1/3 of the position. But if it starts tightening up, which it kind of is, kind of tightening back up in there, so you get this little kind of Davis box action going on. I quite like that now for targeting that back for a setup. So what I'm going to do is the 2/3 that I took off, I'm going to look to add it back, and then I'm going to place a stop loss underneath these lows if the risk makes sense. And that's still pretty tight in there, just underneath the 21 EMA. That's going to be around about 3.5%. Pretty happy with that actually. So what I'm going to do is go stop loss on the entire position, which is pretty much underneath the low of that demand tail, about 3.5%. So the 2/3 that I've sold, I'm now looking to add back. For the purposes of this, I'll be looking to mitigate the risk if I get filled. It's getting even tighter. This setup's even better actually. Get filled in there. That there is a textbook trigger bar, just extremely tight. Volume, no volume on it. Perfect. So this is going to be the add back, the 2/3 that I've already sold off. Now what I'm going to do for the purpose of this is my stop loss is here at around about 3.5%. So a 7% gain means that I could sell 1/3 at 2 times where the current stop loss is and free roll it. Maybe I could push it up a little bit. So actually might make sense to try and free roll a little bit lower than 7%, because what I'm thinking is I could push my stop loss to maybe 255. So that would then be about 2.5%. So what I'm looking for now is a 5% gain through here. So let's go here. Let's just kind of plan this trade out for the risk mitigation element of it. So let's pull this up here. 5% is going to put us at around about 275. So let's just do that. So this level here around 275 is where I'm looking to free roll the trade and then push my stop loss up a little bit. So do that simultaneously. I'll explain I'll explain that. So let's see. Okay, getting out well, even though that day where I was able to free roll it isn't actually an overly bullish day, still able to free roll it in there. I use sell limit orders to help do that. So we're now selling 1/3 in there, but to sell 1/3 at 2 times where we wanted our stop loss, we've got to move this up from 3.2% to about 2.5%. Okay, like this, 2.5% roughly. That's still going to be just underneath the 21 EMA. So again, active risk mitigation there early on in the trade. Now it's all a case of, are we able to sit and try and ride the intermediate term trend again to the best of our ability? So I'm riding the 10 EMA, 21 EMA, start getting extended. I may be looking to choke some off. And we still kind of got this original third from down here as well. So this here looks to be a testing action. So still trying to hold here because this is kind of a testing action. So still looks to be testing. This is first test. Now can we start reversing? So what I'm trying to do with my breakout trades, free roll into the first pop, sit through the test, and then on the reversal candlestick, move my stop loss up on the remaining parts. Maybe that's 2/3, maybe it's half, to break even above here. It would kind of make sense to be somewhere between $2.61 and the lows here underneath the 21 EMA, something like that in there. We'll see if we get a reversal bar coming through. So let's play it forward. So kind of looking for that obvious reversal candlestick. Not really seeing it yet, but potentially still building a base. It's a bit of kind of boredom area. Still kind of tightening up. And this is still looking pretty constructive. So if I didn't have a position, I'd probably be looking to add back through here. Look how the volumes dried up. I'll tell you what, the third I took off, I'll be looking to add that back, probably through that high. And then I'll simultaneously be then probably pushing my stop loss up on the entire position. But for this add back, what I'm going to do is go in with around about a 3% stop again. So like this, push this up here. Just like that in there. So we'll have about a 3% stops, and then for the purpose of this, I'll just show you how if this was a new entry, you could focus on kind of your active risk mitigation as well. So identify, control, and then look to mitigate. So what we're saying is this stop loss is around about 3%. So again, we'd be looking for about a 6% move. I'd like to free roll it underneath $3. So 6% move would be roughly $2.90, 93, something like that. Then we could be looking to free roll into there if we wanted to. Imagine if this was a new position as well. If it starts moving up here, then I'm going to be getting rid of that lower stop loss, pushing my stop loss probably on the entire position up to here, because we've kind of then had a testing action and then a reversal. So this is kind of adding on a subsequent pivot. So here we'll get filled like this. So that there is going to be the entry / add back. Now let's see if we can then mitigate the risk on this trade. It's starting to kind of go. This is actually now kind of enough of a test and a reversal that I actually want to get rid of this lower stop loss on the position and just go entire position here. But I am still looking to free roll at $2.92. Imagine if this was a new position as well. So let's see if we can get a push. There we go. So we've then able to sell 1/3 in there to free roll. So again, I use buy stop limit orders for the majority of my entries, and then when I'm looking to free roll, I use sell limit orders. So we sold 1/3 in there to free roll. We've got our entire stop loss here. Trades acting really well. I may now push my entire stop loss up actually underneath the 50 SMA here, because again, this is kind of see what I'm trying to do. Very, very repeatable, very methodical what I'm trying to do. Obviously identify a high quality setup, as you can see here. Initially control the risk, try and mitigate the risk into the first pop, sit through the testing action, then on the reversal bar, push my stop loss up on the remaining parts to around about break even, just above, just below, kind of depends how the trade's playing out, and then see if I can sit for the intermediate term trend. So let's now keep playing this forward. So I'm now trying to sit through the intermediate term trend. So stock's getting out pretty well. So black line, blue line, basically, unless I start thinking it gets extended. In here, it's kind of closing right on it, but the volume is so low. But I tell you what, for the purpose of this, I'll be a real stickler. Opens on the high, closes on the low, closing right on that. There, I'm going to take off 1/3 of the position. If it resets back up, I can always buy my position back. So I've now only got 1/3 of the position left, probably pushing this up, something like that, underneath $2.90-ish, something like that. If it tightens up and the volume dries up, which it kind of is again, then I could be looking to add back. See how this is now tightening back up again, but a kind of Davis box action going on through there. So let's go through the high there. So the 1/3 and 1/3, which is 2/3 that I've taken off, I can now be looking to add this back. So stop loss probably underneath the 10 EMA, underneath those recent lows. That's going to be around about 2.5%. So what I'm going to do is keep this stop loss for 1/3 there, and then I'm going to stagger that stop loss there. So I've got 2/3 up here for looking for the add back, and then I've got 1/3, then I've got 1/3 here through 308. Now if we get filled, then I'll be looking for 5% to then be free rolling that. So again, identify, control, mitigate, and optimize. So I think on that day there, did we get through 308? We didn't get through it. We're looking for 309. This day here, we do get filled. So just like that in there. So that's going to be our add back, the 2/3. So we've got a 2.5% stop loss on those. Looking for it to go. And it's still kind of umming and ahhing there. Still umming and ahhing. It's really acting bad there. We're probably going to get stopped out on the 2/3. And actually what I'm minded to do is just exit the entire position there, because we're now closing below the 21 EMA. I'm not liking that. So that there is actually going to be the full exit for me. I'm just going to exit. Just going to exit there. So let me just delete some of these lines, so then you can see kind of how you're then trying to kind of plan your positions out and do it. This worked back in 1970s, 1980s, 1950s, 2000s, this year, last year, for the next 100 years. It is just supply and demand. It's training your eye to identify optimal setups, pattern recognition. So a good exit there. And then if it tightens back up, guess what? We could be looking to re-enter the stock, starting to tighten up. That's kind of okay in there. But this is here. I don't want to make this video an hour long, guys. What I would actually really encourage you to do, as much as it's great you're watching me do it, actually go and do this yourself. So again, learn the basics in terms of the setups that you're trying to identify. That there is just pattern recognition, looking at thousands and thousands of them, studying them, whether it be springs, whether it be breakouts, whether you're creating your own setup. Just know exactly what it is you're looking for your criteria, and then each trade, it doesn't matter if you're trading breakouts, if you're trading springs, each trade has an identifying part, initial controlling part, a risk mitigation part, and then also an optimizing profits part. So that there is then what the deliberate practice is designed to do, is you going bar by bar, thinking about those different elements, tracking and monitoring your results in the likes of Excel or something like that. You can then categorize it in terms of the various setups. You can see, actually, I'm much better at trading this setup than I am at trading this setup, so do less of what's working, do more of what is working, and that there is how you can make significant improvements to your skill level. And if you do this once or twice a week, and you do this for the course of 6 months to a year, obviously we're moving into the new year. So if you made a New Year's resolution to do this for a couple of times a week, each time half an hour, I think at the end of the year you would be stunned in terms of your growth and your skill set at trading. So that's it, guys. I will wrap the video up there. Thank you very much for watching if you made it to the end, and I'll see you in the next one.